Well, there's been a lot of big activity in the M&A space recently. We've been talking about that as far as Deutsche and it's benefiting in particular.
Top earner for the bank.
Yeah, it's particularly playing out at the moment in the healthcare sector. Of course, CSL is set to acquire a Swiss company as part of its diversification plan, while Ramsay Healthcare pushing into mental health in the UK. So, what to make of it? For his picks, Marcus Bogdan joining us from Blackmore Capital. Marcus, a very good morning to you. Just before we get there, interested to get your thoughts on that market reaction to the Fed.
Well, I think we're definitely moving into a more volatile environment, and I think there's really three risks there: the tightening of liquidity, bringing back that support level in the markets, and addressing this issue of rising and persistent inflation. And we're starting to see that embedded also in Australia. And then the final risk that we're seeing is obviously around Omicron and the impact that will have potentially on mobility and the sort of the reopening side of things. So all of that to us points to a more challenging environment, a focus on quality and a focus on companies with pricing power, and also with the potential of further interest rate rises, strong balance sheets.
So in terms of turning towards this M&A space, we were talking recently about how it's been a big way to, of course, not just wait for organic growth, but to buy into growth. Now, the CSL deal was interesting. It seemed to be rumour and confirmation within 24 hours. Is that like a record transaction?
Well, CSL's history of acquisitions is that they don't make many, but when they do make acquisitions, they're of significant size. And this certainly is of significance. It will represent around 16% of CSL's revenue if it actually proceeds and is successful. And it will be EPS accretive in the first year. They're moving into therapies around renal care and iron deficiencies. This is a new area for CSL, but it is an area where the underlying there is underlying chronic disease there in renal disease, particularly the issues around diabetes, obesity, and high blood pressure. So it is a growing market. I think the market size is around $25 billion. And we'll just need to see how significant and how successful this acquisition is, probably over a 2 to 3 year period. But I would underline the fact that CSL historically has been very good at making acquisitions in terms of being able to add value, and for those acquisitions to really become more prominent in the overall group. And their more recent one was their flu vaccination business, which they bought from Novartis in 2016. And they took that business, a loss-making business of around $200 million, and today it's got operating margins over 20%.
Marcus, of course, its core business is blood plasma. So how important is it to make that diversification at this point?
Well, it's interesting. That question was asked, and the sort of the rationale of making this acquisition at the moment. We still believe that there is still very, very strong demand for their core business around plasma therapies. Industry checks suggest that this market can still grow at around 8 to 10%. It has had issues around supply of patients being able to go to collection centres to donate plasma, but we fundamentally believe that this remains a core and growing part of CSL, and because they've got such a strong balance sheet, it is still in that area of around therapies. They have moved into this new area in terms of renal therapies.
So let's switch gears to Ramsay and into Elysium mental health care. I was reading a background report that I think was like 60% of mental health cases are going untreated. Is this a great step up there for Ramsay?
Well, Ramsay have got a history of being in mental health, particularly in Australia, and this is very much a new acquisition in the UK market. They're primarily in small private hospitals in the UK market, and they did try to buy a group called Spire last year, which was not successful. As you correctly point out, mental health is becoming an increasingly problematic area for healthcare and for society in general, and it is growing at very high rates. And so they are moving into this area, into the UK. It is receiving additional funding support, and it is, I think, around 70 odd centres there, and they've got also got freehold on some of those sites as well. So it's expected to be EPS accretive of around 5% for Ramsay, and it does extend their footprint into the UK, which I think makes some sense.
So Marcus, both with CSL and Ramsey, would you be buying in at these levels, or do you feel as though perhaps the share price is going to come under some pressure?
Well, they could come under pressure in the short term. Historically, when CSL has acquired businesses, it's taken some time for the market to digest it, to understand it, and to see the proof of concept. But their execution has been exemplary. Both CSL and Ramsey are core stocks in the portfolio, and I think there's a broader theme, particularly on Ramsey, and that's the reopening of the economies, and particularly around elective surgery, and it's been well documented how significant those backlogs are, and that we believe that the runway, particularly for Ramsey for the next 2 or 3 years, is quite significant in the treatment of the backlog and also new and existing patients.
Let's switch gears, and of course our favourite consumer staple, Woolworths, got an absolute hammering. And analysts are a little bit divided. Some saying Woolies' time is over, and others saying buy the dip. Where do you stand, Marcus?
Well, we fundamentally believe that Woolworths remains an incredibly strong franchise, and you could absolutely argue that their strategic position has been strengthened through COVID because they've been so successful in the way that they've pushed into online sales. They saw online sales of 50%, representing 11% of total revenue. Yes, it is at a lower margin, but they're well ahead of their competitors, and particularly the discounters and supermarkets like Aldi, which is not in that area at all. And obviously online, particularly in lockdowns and the way that we are shopping now, is an incredibly important channel going forward. It was an absolute disappointment, particularly on the earnings perspective. There's still underlying strength there in the sales, and I think they're taking a short-term hit because of what they're seeing, those issues in supply chains, those issues in costs. But fundamentally, I think this remains a core portfolio stock, and I do think over time that they are, with their investments in analytics, in data and online, they're actually becoming a stronger business for us.